Hey everybody, Steve here, and today I want to talk to you about 6 stock market myths that are out here. And I mean, there are multiple myths, but these are just some of the ones I can remember in my head through various conversations of talking with people. When they ask me about stock investing and what I do, what I'm into. First myth is you need a lot of money. They'll tell you, people say, oh man, you need a lot of money to start in the stock market. You need thousands of dollars. No, you don't. You don't need thousands of dollars to start. In fact, with apps like Robinhood, M1 Finance, what's the other one? Webull. Webull's the other one. You can start off with as little as $5, I think. I think they advertise $5. But yeah, you don't need a lot of money. Like, people will tell you, oh, you need thousands of dollars. Oh, they won't let you make a trade if you got at least $1,000 in your account. That's nothing. It's not true at all. That has nothing to do with anything. Nowadays, they want to promote investing and try to get it out to the people and promote it. So, I mean, a lot of different brokerages and apps that are on your phone will help you get where you need to be with as little money as possible, just to get your feet wet in the investing to see if it's right for you or not. That's the first myth. Along that line, people will tell you, how can I say this? People will tell you that, oh, well, if you invest and you don't have a certain amount of money, you lose your money immediately when you get in there. It's not like playing in a casino on a roulette wheel. You don't put money in and then after the same day it goes away. It's not like that. I just promote everybody to do their own due diligence and see, what's right for them. Another myth is this. Oh, you need a financial advisor. You have to have a professional make the trades for you. You can't make the trades for yourself. Come on, man. Come on. I need to ask these people when they ask me, where'd you hear that from? Did that happen to you? They told you that? Who told you that? It's a bunch of crazy stuff people say. But yeah, I mean, you'll hear people say stuff like that. You don't need a financial advisor. Me, I've never had a financial advisor. I'm a passive investor. Like, I'm not an investor where I need a financial advisor. Like, I do all of my trades. All of my trades are ran through me. All of my research is ran through me. And I don't need to pay somebody a fee to do something that I can do myself in minutes. And I can watch the progress myself. I don't need somebody to say, hey, this just came out. All I got to do is turn on the news. I mean, CNBC has programs. They run all morning while the market's open. You can learn very easily. All you got to do is just watch it. You don't have to sit there with a pen and paper. But, I mean, you watch it long enough, you'll pick up what the expressions are and all the different terminologies. That's how I learn. Another thing is that where you can learn is grab some books. I mean, granted, some of them are, you might have to find them, go on Amazon or something. They're not normally in regular stores. But I mean, Barnes & Noble sells books on, they're usually in the finance section. Barnes & Noble sells books. I get a lot of my books off of Amazon. YouTube is a good source. As far as understanding what different terminologies are, I learned there too. But you just gotta watch what people tell you. You don't need no financial advisor to teach you about stock and make a trade for you. I mean, that's erroneous. You don't have to do that. So next time you hear that from somebody, out of respect, just nod your head, but just in the back of your mind, it's like, yo, this person don't know what they're talking about. Because a lot of times people talk to you about, stocks and this and that, and they'll say something and they don't know that you know anything, and they'll just try to tell you anything and have your head gone. You don't want to deal with that. A big thing that I've heard, and a lot of people say this, and these are the people that have never invested. They don't know what companies to invest in. They don't even know what type of different benefits that investing for retirement or anything like that for the future brings. And, you know, I'm not discrediting nobody or anything like this, but it got to be said, these are some of the most ignorantest people out here. And these are the ones you got to really just take it with a grain of salt when they talk about this one, which is number 3. Oh, the stock market is like gambling. It's not like blackjack. It's not like roulette. And it definitely ain't like craps. I mean, now, getting back to the casino thing, I don't know where they get this from. It's like so I say to him, I say, okay, well, how is it like the casino? You never know what's going to happen today or tomorrow. It's too much risk. You know what risk is? Risk is when you make a decision based on not knowing anything and hoping that it comes out right. So you weigh the risk. Now, there is risk with having your money go up or down. But the way you mitigate that risk is what you do is you put your money, like me, I put my money in blue chip companies that are almost too big to fail. Like Wells Fargo, Bank of America, Apple. It's like $1 trillion company. Like, unless everybody all of a sudden smoked crack, you would see it coming if something was happening, and you would have time to jump in and jump out. See, people say things like, oh, the stock market, this, I had a stock, and the stock went all the way to zero. Stocks will never go all the way to zero. They'll go bankrupt. Like, I'll give you an example. If a stock goes to zero, that means the business has no value at all. No value. Including that, it has no value. If that's the case, they would have to do layoffs and all that. That would be reported. You would be seeing that if you're keeping up with the positions that you have, which you should. There'd be a position you would keep up with them. It would be massive layoffs. They would file for bankruptcy first to try to save the company, probably Chapter 11, like Celsius did. Celsius still got money. They just don't want to give it out. They're trying to hold on to the fan, and then they want to reinvent themselves and get the business back going. They don't want to lose out. That's why they Celsius is the cryptocurrency, which happened last week, where they filed Chapter 11 bankruptcy to save the company and then internalize and try to build the company back up while putting all the shareholders and people that brought the Celsius cryptocurrency on hold, where their money's frozen or stuck where they might not even get it back. That's another thing, but that's a gamble. You know, cryptocurrency right now is a gamble. I mean, it's proven to go up and down, but it's not been around long enough to have a track record. And with new coins popping up every 5 minutes, you never know. Like, it's saturating the market of cryptocurrency. But I'm straying away. But yeah, it's not a gamble. It's not a gamble. As far as because you can watch your money. Your money doesn't just go up, and then and just fall off. And you got to hit sell like in the next 20 seconds, or you lose like $20 million. No, it's not like that. I'm sorry, it's not like that. I don't mean to get carried away, but I mean that's one of the things that make it runs me hot when people say that, and they don't even know what they're talking about. Another thing, this goes along with the gamble. Oh, you'll eventually go broke. No matter what you do, you'll go broke. You'll look at your portfolio one day and it'll be down. All we need is a market crash. I'm a long-term dividend investor. When the market crashes, that means the stock prices go down dramatically, which means they're on sale. If I go into Walmart and I want to invest in the television, and the television I wanted to buy 3 weeks prior, but I didn't have the money. And all of a sudden, that TV goes down from $900 to $250. Do you think in my wildest dreams, I'm going to say, I don't want to get the TV because the price went down so fast? No. The TV still works. Ain't got nothing to do with the company. I'm going to get mine. I got to get it. Yeah, let me have that. Same thing with stocks. If you buy shares of a business that you know is bona fide, Johnson & Johnson, Procter & Gamble, stuff like that, ExxonMobil, like, I mean, come on, like, it's not going nowhere. I don't care what's going on over there. And as long as I know the company's not going to jump up and fold, and that stock price falls, I'm striking on it, and you should too. That's how the rich get richer. In this time of recession, everybody that has a lot of money, they're sitting back. Yeah, they're getting their bills ready. I mean, they're consolidating their bills and loans and stuff like that, paying stuff off, freeing up cash flow so they can buy these shares while they're down. You know? Another thing. So, I mean, you're not going to eventually go broke if you're just paying attention and you're watching and you're putting your money in companies that are bona fide and established companies. It's too big to fail. That's why they tell you to set it and forget it. Set your money up. Boom. Don't even worry about it. 10, 20 years. Jump up, look, boom. Oh, I got money. You know what I mean? I don't have to work as hard no more. I can retire early. You know, it's as simple as that. Here's another thing that's crazy. Oh, I don't invest in the stock market. You know, it makes no sense. I got a 401k. A 401k is the stock market. Now you'll say that to them. They'll say, oh, no, it's not. No, it's not. I said, well, what is a 401k? This is barbershop talk. What is a 401k? Oh, a 401k is when you put money up like a bank. You put money up, and on the 401k, the money that you put up, the company will put up a certain percent to match the money or almost match the money that you put up. So you get paid twice. That sounds good. That sounds good. Now, don't get me wrong. A 401k is a good investment for people that want to save for their retirement because it does save. But this is the thing I have with 401k. And this is just my personal opinion with it. I mean, if I was working a 9 to 5, I would have a 401k. I would. But the thing that I always question in the 401k is who's picking the stocks for the 401k? And what brokerage are you going with? You know, because that matters to me or somebody that really is into it. Because a lot of times a 401k, they put your money into a fund, but you don't know what the stocks are. And then I seen on the news a couple of I think it was last year where they talking about corporations are selling the 401k to people on the like agencies and stuff like that. And I'm like, I mean, the 401k is a good investment. I mean, it's a must if you work. And don't get me wrong, guys. I'm not knocking it because I've never had to invest in a 401k. But like just what I said, like how I said, people will tell you, oh, it's not the stock market. It's just a place like a bank holding money. Okay, well, what's the APR interest rate on that money every year, annually that you're making? They can't answer that. You know, you claim it's better than what I'm doing, but you don't even know what you're doing. You don't even know. What are you talking about? And it's... Here's the last one. I'm going to just get to this one real quick. A bank savings account is a better investment, which they say is an investment, than the stock market. And then I explained to them, okay, if you put, what's the average return yearly on your money per year? Because they pay you interest. They pay you interest. Okay, how much money you got in the bank? Well, right now, $100, but I'm getting interest on it. Okay. Something happens and you get to where you can't get that money for a year. How much interest did you make off of that $100? Now, keep in mind, interest rates. I took my son to go get his first bank account 2 days ago. I don't want to say the bank, but it showed on the computer the interest rate was 0.001 or 0.0001. 1/1000th of 1%. So what does that mean? If you have $100 in the bank, it's going to take you. Now you remember with inflation, the American dollar, the U.S. dollar, loses 2 cents, 2% per year. So $1 now is 98 cents next year. How you making money? So off of $100, it would take you what, like 100 years to get the money back? 104 years or something like that? I mean, I would have to calculate. I would really sit down and calculate it. But you lose money holding your money in the bank. It's just sitting there. And then they're borrowing, they're taking your money and making money off of it by sending it out and letting other people borrow it. And you sitting here thinking, oh man, I'm doing good. And then I tell them, to try to break the tension. Okay, $20,000 in the bank. And then you put $20,000 in the stock market with a 7 to 8% return every year. Market goes down 3-4%. It's still more than what you're making in the bank. And they'll, oh yeah, that makes sense. But for some reason, it's a phobia about the stock market. People tell you, oh, people kill themselves daily off of the stock market. It's a game of suicide. Now, not saying that didn't happen, because it has. And I'm not making fun of that in any way. But just don't listen to what people tell you guys. I mean, people will say some of the silliest stuff. I mean, it's laughable. But I mean, do your own due diligence, and you'll figure it out. It's very easy to do. And then it's very exciting. It's exciting to see your money grow in front of you. And just understand all the terminologies and understand when people are panicking and you're like, man, I'd be over there in that boat with them. And then, you see how easy it is to just make money. I mean, it's, man, I can't even explain it. But listen, I'm over here at CVS. I had to stop and make a video. I was driving. I just thought about this. But I appreciate the time, you guys watching the video. As always, leave a comment, like and subscribe, and I'll see you in the next video. Thanks a lot for tuning in. You guys be good.